Hi folks, Lee Gettess here with the Market Sense for the week of June 5th, 2018. The charts in this presentation are provided to us courtesy of Gettess and their Trade Navigator software. We're looking at a weekly bond market chart here, and when we talked last week, we said that this incredible rally, or not incredible, but very rapid rally here was really suspect because it was just sort of on fear, not really on anything. And so they gave it up pretty quickly. I'm a little disappointed at how easily they gave it up, but nothing too surprising here about what is expected. The key point this week, I think, will be seeing where exactly they can find support. Resistance is up above 145.20, and I'd kind of be a little surprised if they get up there this week. But if they can hold the 142.08 area, that's both the light blue and green line here in that vicinity, if they can hold right around in there, that would look pretty good and still look like they have a good potential to turn back up again next week. They could drop all the way down to the red moving average down here at the lows. I don't know why I've lost my cursor. There we go. They could come down to the red moving average here in the mid 140 area. That would still be okay, but clearly not as strong as holding 42.08. And one thing to watch for is these highs here. You go back to the highs here in April, and they didn't quite get there with this little spike here last week. If they can take out these highs, start trading above 146.08, that would look really, really good, I think. That's not a prediction, just something to watch for. This week, the whole key to me is 142.08. If they can hold around there, I might be tempted to take a shot at buying them there. Stocks have a much different situation, but certainly not a lot clearer. Last week they tried to break down and they seemed to reverse, and we were saying if they could get back above 2750 it would look really, really good. Well, they didn't do it last week. They are doing it now, and that's good. It's just not as good as it would have been if they'd have done it last week. We're kind of looking at if they get above 2760, that would sort of look like an upside breakout. And I say sort of because, everybody's heard the phrase, not seeing the forest for the trees. Well, we're kind of looking at the roots here. We're looking for a breakout of a very short-term pattern, which is actually inside of a couple larger patterns. And so what we get here won't really constitute a bigger period breakout. It's sort of tough to know how quickly or how much you should believe in anything here. However, they got to break out on the short term before they can break out on the longer term. So, I mean, it might be worth taking a shot at. But you have to understand, if they go above 2760, we're still just above 2800 for these highs here. No guarantee that they're taking those out, so it might just be a short-term trade. And we're looking for a move above 2760. I would call 2760 the resistance this week, but I have no intention of selling it. Just if they get above it, that would be significant. Best support is right here at the middle moving average around 27, that's actually 2718. That would be pretty good if they could hold there. That would look very positive, although before last week we had two pretty small range bars, so holding there wouldn't necessarily mean they were going anywhere. But it actually looks like they might hold above it and break out to the upside. And again, the key there is just, well, breakout. That's fine. It's a short-term breakout, but can they take out 27 or 2807 up here? That would be much more significant. And again, like it goes on forever. You still have the highs from January that are quite a bit higher. So none of this constitutes a huge move. Right now, they're still where they were back in February, and they're not really doing anything until they do it. How profound is that? So that's all we've got for you today. I hope you can find something